Checking now with the Money Desk, Devin Murrigan joining us. And Devin, you're focusing on Discovery. Their share price has fallen, but they've got good numbers. How does that work?
Yeah, I think it's all got to do with a dividend. We're going to speak to Discovery in a moment and find out. But here's the background to the results. South Africa's largest medical scheme administrator, Discovery, seeing a surge in profits with most of the COVID-19 impact now behind it. The insurer says relatively lower prices also helped it carve out additional market share. Headline earnings jumping 74% to just over 5 billion rand in the group's year to end June period. The COVID pandemic hit insurance industry hard, forcing that industry to set aside billions of rands to cover future claims. But the threats have now eased due to the latest variants of the virus being less deadly. Well, let's dive further into those results now with Hylton Kallner, the chair of Discovery South Africa's Exco and CEO of Discovery Bank. Hylton, thanks very much indeed for talking to us. So good results, in fact, great results, but the market was seriously unhappy today. Discovery topping the losers, 10% down on the day. And I'm told it's mainly because you opted not to pay dividends. Why?
Good evening, Devin. As you say, I think the results reflect a really good performance across the entire group, and really a recovery post a complex period of COVID-19, where we paid out over 7 billion rand in life claims. We still found ourselves in an uncertain environment from our perspective, where while the COVID-19 is largely endemic, it's still uncertain as to the sort of the way forward, and that's I think that's compounded by the fact that there's broader macroeconomic uncertainty and volatility. We continue to invest heavily in the business in the country, and from our perspective, that's a positive thing and a great thing to do in the current environment. And I think that's reflected in the results. So from our perspective, a really strong set of results, strong new business, strong profit, and a very solid rebound following COVID.
Why no dividends then?
So I think the dividend policy is reviewed on an ongoing basis by the board. But I think the main contributing factors were the large capital payouts through COVID, and the significant investments that we're making in growth initiatives, and the sort of the environment that we find ourselves in, which is from our perspective still uncertain as we emerge from COVID, and broadly when you look globally at the macroeconomic environment, we still think that there's uncertainty and volatility ahead of us. So we remain cautious, albeit very well capitalized, and as you said, record profits over the period, which is I think the sort of the focus of the management team.
Look, one big positive as well in those results was Discovery Bank. You head that bank, was singled out in the report as achieving a milestone of 1 million accounts, but you made an almost billion rand loss there.
So the bank is progressing according to plan, and in fact ahead of plan in most metrics. Client growth and account growth is significantly ahead of plan, and the sort of the investment that was made over the year was entirely sort of in line with the expectations and the projections and the targets. So the bank is really progressing well. Growth has been strong. We've grown to over 11 billion rand in deposits and over 4 billion rand in advances. The quality of the credit book is exceptionally good, and the bank remains on track to achieve its break-even targets and strong growth thereafter in the next couple of years. So really a pleasing period, an important period for the bank, and as you say, really sort of a positive trend in all of the different areas of the bank.
Hylton, I just want to shift focus to medical aid price increases, just to help us understand this. So Discovery had deferred that price hike, 7.9%, I would imagine, I think it was, happening in October, that's next month. And then there's another increase that kicks in at the start of the year. That's going to bite clients a bit, wouldn't it?
So the Discovery Health Medical Scheme, which is obviously a separate entity,
Yep.
It's managed and administered by Discovery Health, has performed very well. And as you say, the increase that is that members will experience next month was actually delayed by a significant period. So members had the benefit of not paying the increase earlier this year, and in fact the same was done last year, where the increase was delayed. Obviously, there has to be a catch up in terms of the claims inflation that has to be met by the medical scheme. But that hasn't been announced yet for next year. The medical scheme will assess the position. It sits on a significant surplus of assets in the Discovery Medical Scheme, incredibly well capitalized, and that process is underway and will be announced in the next few months in terms of the strategy for benefits and contributions for 2023. But I think the medical scheme itself has grown strongly from a membership perspective. Lapses have been at record low levels, and it's really fulfilled a fundamental need through COVID for its clients, and I think that's been really, really important.
Before I let you go, Hylton, I mean, you had the Competition Commission raiding your offices and that of 7 other big insurers. I mean, they say that these insurers, including yours, there were grounds to believe that there was price collusion over different types of covers. It's been some time now since that raid was announced. How have you been responding to this?
So I think the first point to make is that we would never ever collude or sort of look to fix prices. In fact, the exact opposite. I think Discovery Life is the #1 provider and market and new business acquirer of life insurance in South Africa, incredibly competitive and the leader in that space. So we'll wait for the details to unfold. I mean, obviously the process is important from a regulatory perspective. It's important to have a strong regulatory environment, and we'll obviously support and assist wherever we can through that process. But from our perspective, we would never ever collude or act to fix prices. And in fact, as I say, we are vigorous competitors in this space with the #1 market share in the life insurance market.
Well, thanks very much indeed. Hylton Kallner is the Chair of Discovery South Africa's Exco and CEO of Discovery Bank.